And whether it's in RedSwan or not, this is where your capital and your mindset should be looking at if you want to be successful in real estate. The key here is that you're buying 100% of your investments going into real estate. It's not going into fees, it's not going into due diligence costs. You're buying directly into real estate, which means you're saving all the pursuit costs necessary to make a quality investment. We're going to be airing the Hello Living Lenox asset with our sponsor, Eli Karp.
Only true passion can stoke and sustain the fires of success.
This is an opportunity for our investors to hear about this, talk to the sponsor directly, ask them questions, and be a part of this before it actually takes to the markets.
I'm Eli Karp, and this is my blueprint.
Don't want to miss this one. It's going to be hot. Very, very hot profit. Hello, everybody. This is Edward Nwakati. I'm the CEO and founder of RedSwan CRE Marketplace. Thank you for joining us in our second series of digital deals. We're presenting to you a fantastic opportunity today, but I'm very proud of the fact that we are able to bring you for the first time a digitized commercial real estate opportunity of high quality. Now more than ever, you can now buy a piece of real estate that's been digitized into shares, which allow you to buy at a lower basis point of entry, but also allows you to sell at any time like you would a normal stock. Thanks to the SEC's new regulations, RedSwan is now able to let you participate in high quality real estate transactions like the one we're going to present today. So today we have a project that's based out of Brooklyn, New York. It's called the Lenox residential property. It's 56 units of high quality residential luxury high-rise project, and it's built by none other than the Hello Living Development Group out of Brooklyn, New York. And the sponsor of Hello Living is the CEO of Hello Living, which is Eli Karp. He'll be here today to talk to you about his asset and tell you all the things that you might want to know regarding his passion behind building this project. What I like about this property is the location is a fantastic urban location in Brooklyn, which makes it very close to shopping centers and local cafes and very walkable type of property. Also, the demographics are strong. The home values in the area are very high. Matt Damon, I heard, just moved up down the street. So this is a unique opportunity. But also the management has been around for a long time and has extreme amount of experience in running properties like this very efficiently. So, with all this, and you have good yield, these are some of the major highlights about this property. I do want to put a disclaimer out that although we're presenting this opportunity, RedSwan is not soliciting your investment online. We're basically using this opportunity to express to you a learning experience so you can understand how the benefits of this property are related to the tokenization that we provided on its behalf. So we hope this is a learning experience. This is the first time we've been able to present to you a tokenized asset of this quality, and we want you to make sure you have full understanding of the benefits of tokenization. So my guests today, I have two. We have, like I said, the founder and president of Hello Living, Mr. Eli Karp. He'll be here, and I'll have him on momentarily. But also, as a special guest, all the way from La Jolla, California, we have Mr. Elliot Burrell. Elliot is the acquisitions director for Interwest Capital. Interwest is a group based out of La Jolla, California, that has has about 3,500 units of apartments under management, as well as about 11 hotel properties in the United States. I've known them for many years, and I can say this: they have never made a bad purchase. They've been able to make significant profit out of everything they touched, and so I brought Elliot here so he can help share his perspective on Hello Lenox product as well as the neighboring community. Welcome, Elliot, and also Eli. Thank you very much. We're going to now go to a clip from Eli, which is going to have him explain a little bit about the property, which is Hello Lenox, and his passion, his quality level of this development. Take it away.
Why should investors feel secure to become part of the Hello Lenox project? Number one, we are occupied. We are occupied with tenants. We are occupied with an amazing lease with a hospital, which is just a few blocks away, which is opening up their main office in our building. It's a very stable tenant. It's a great lease, and they already started paying rent as of June. Now let's discuss what makes this building stand out that attracts all the tenants to come. Number one, we have flow-through units giving you light and air from both sides, large terraces with triple pane windows and doors that literally fold up to the side to open up to allow the outside in, as well as private elevators giving you the exclusive feel as a penthouse for each unit. These are the main attractions that bring tenants to the buildings, and with very little competition for others. Now, besides the building itself, it was constructed by my own company. That's how I do all my buildings, to make sure that there's going to be very little maintenance later on. I also have no hallways in the building to clean or service, because everybody has their own private elevators. And that allows us to keep the maintenance at low. The quality is on the next level. We have even high-crete in the concrete that doesn't allow the concrete to stain or change colors. There's so many things that we put into this building to make this a very secure investment, with the quality, with attracting tenants, with features that this building has that none others have. So in closing, Brooklyn is a great place to invest as it keeps growing year over year. And to have a building that has an amazing tenant, to have a building that has all these unique features that make it stand out, to have a building that is built with all the amazing qualities that we put into this to make sure it's long lasting with very little maintenance. All of these put together creates a very secure place to invest in real estate. Thank you.
So I'm going to jump right in. We want to talk a little bit about this asset, but I'm going to talk about the numbers before I get into the asset, because I think you need to know, the performance that they're looking for in this asset. These are all projected performance, but a person of his experience will tell you that he's done this many times and established a benchmark of his success. They're raising $9 million. That's going to represent 70% of the net equity of this project. And net equity is how dividends are distributed between the sponsors and also the investors. That's going to provide you with a preferred 8% cash-on-cash return. That means that before any of the partners or the sponsors get paid, they must pay the preferred return as a liability first. So you get your money first, and then after that, the rest of the investors get their money second. That's a very major benefit. It's a 2.0 multiple, which means that your investment should turn over twice, you double your money, so to speak. And a little bit about the property yield performance. They're looking to generate NOI of $2.9 million over the next 5 years. The capitalization of this is based on the following. The asset value is roughly $46.2 million. The senior debt on it is currently $35 million. And like I said, they're raising $9 million, and they're minimum investment size is $5,000. That's right. So an asset this quality, the minimum investment for you to get into owning a percentage of this asset is only $5,000. And based on the tokenization and the SEC requirements, we can bring up to 2,000 investors buying making a $5,000 investment to capitalize in $9 million. Although I think many people are going to buy more allocations because they want a larger interest in this building, but it still gives the average person an opportunity to buy a high quality asset for the first time ever and ride on the skill and the benefit and the knowledge of the sponsors and the management of this asset. So getting back to the asset itself, why I like the Lenox is because of its location. The demographics around the Lenox are actually very strong, meaning that people have enough income, 3-4 times the income to pay the amount of rent there, which is very healthy for raising rents. Also, the asset is built with high quality finishes. He's built something of a condo quality, but yet is for renters. For example, rather than have an elevator that everyone rides on that goes to a common area, this elevator goes direct access to each floor. So therefore you have very little impact with other members of the community and also minimum cleaning costs for the building, which makes higher profits. Let's start talking to our guests. Hi, it's great to have you here today. It's prolific in your design and thinking about the Lenox. When I look at today's world, I see what's happening with social media and social distancing, and I see how you design the property where now you have direct access elevators. Tell me, what inspired you to design this property?
I wanted that it should be exclusive. It should have that exclusive feel, like a penthouse. I designed my first building in 2005, and one of the floors, which we made the entire floor a unit, we had the elevator go directly to that unit and open up, and it became such a big hit. It sold for a lot more than we imagined at the time. So designing newer buildings, I always keep in mind what things really work and what makes people excited to become part of it. So the private elevators was definitely something that stood out. And it is on a high rise, it's a little bit more expensive to do, but it definitely got people to come into the area. As we said before, this is like an up and coming area, and we were able literally within 6 weeks to rent out almost the entire building. So it definitely proves that that exclusivity works. And now with COVID, it's even better. So most of the people, you don't even know your neighbors. There's no hallways you have to share with. So it really works.
That's awesome. Well, I've noticed that you have several properties in the New York Tri-City area. And I'm wondering, what your thought was in terms of building so many projects in the Brooklyn, New York area, and do you feel like you still have room to develop more product in the same area?
Oh, definitely. Brooklyn just keeps on growing. When I started off originally in Prospect Heights, it's amazing just looking back a few years later what everything came together there, the entire communities. And I see it now in Prospect Lefferts Garden, where we have Lenox, and I have a few other buildings there as well. And I'm completing a few blocks down, even bigger building, not as tall, but also like 200 units. So yeah, there's a tremendous demand, and I like to encourage other developers to come and join as well. So there's also new product coming in. I always like to have the edge, to have something a little bit better, a little bit more unique. But yeah, the area just keeps growing, and Brooklyn is becoming, it's like, it's a place where everybody is welcome, where everybody finds their niche in. And it's been very successful and growing for the last 15 years that I've seen constantly year over year.
Well, awesome. Talk a little bit about the demographics, because we know that the demographics there has, households, incomes that are very diverse. But around your property, talk about the demographics that excited you.
The area where I started off in Prospect Lefferts Garden at the time back in 2015 wasn't there wasn't any new growth there. But I decided I'm going to build something ultra luxury that will pull people to come to the area, even though they wouldn't have if there wouldn't be any more luxurious buildings around. So, and this was the idea why I wanted to do these flow-through units, a lot of light front and back views. And this is what pulls people. So you have a tremendous mix. And also now with the Kings County Hospital, which is expanding, which is only literally 2 blocks away, and it like takes up like a few entire blocks. There's a tremendous, I see a lot of people that are renting from us that are associated with the hospital, especially now that they're going to be a large tenant in our building. So this it's a tremendous mix of demographics across the board. But there are
talk a little bit about that, Eli. I mean, I talk about the demographics. I want to understand the tenant profile because Brooklyn's such a diverse area, and I wonder what type of tenants you're attracting to that property based on the level of quality that you've built. So
I'm definitely attracting a much higher caliber of tenants because my rent is much higher than the average rent in the area. So, but they come from all over. A lot of Manhattan people have come to Brooklyn, and they get for the same price, they get a lot more and better, more unique, and they like it. I also attract a larger Asian community because they love the light and air and the open space that we have. So there's a lot of, and young entrepreneurs like it as well, especially with the big open terraces that literally don't exist in Brooklyn. So between that, it's a big mixture, but it's a mixture coming from outside to this area. It's not people from the area that are renting.
Well, that's good to hear. And I'm thinking in terms of the area household incomes. Maybe you can tell us a little bit about what the value of some of the other condos and homes in the area cost, just to kind of get a feel for how they're saving in terms of residential costs.
So I have a few buildings in the area. I have one building on New York Avenue, a few blocks literally from Lenox, which is a condo. And I'm selling 1-bedroom units for around $525. So almost $1,000 a foot, like 900 something a foot. So it's definitely picked up a lot from when I started in the area. The pricing there was around like $500 a foot. So it's more than doubled in the last few years. And there's a very strong demand. Looking for new condos. I have another building on Nostrand that I was thinking of doing condos as a demand, but I might stick to the rentals because there's so much better financing going with the rentals, and there's a lot more perks for it. So, but there's definitely a big demand for people moving in. Even in Lenox, I had a few people ask me if I would convert to condos and if they would be able to buy. So I could see that there's a need and a want, and the people really call this place their home. That's what's important.
No, I can see that. I mean, the quality that you've built, which is the level of high-level quality finishes for a condo, but is affordable as an apartment. And I can see why there's strong demand. Tell me a little bit about the financing you're looking at. Once you receive this equity from these accredited investors, how would you recapitalize your debt?
So currently I'm on a bridge loan, and I was waiting to refi for the lease to hit with the hospital, because that is a very strong component that I needed, which I finally got. And in June, they started paying rent already. So I am now in the market on working on the refi. But if I can get people to invest, I can literally get either a Fannie or even a CMBS at a very, very low rate, which will make the value of the property even more. So hopefully these rates keep on going and stay in the low threes, and that's what we're looking now at.
Awesome. Yeah, I hope you're right. I think you could get a loan that's at least 3 or maybe even low threes for sure, because of the fact that there's a lot of demand for putting debt out. So I think you'll be very successful with that once you have the equity requirement in place.
Right.
Just looking at the property values again, and the tri-state areas where you've been kind of centering most of your assets. Do you feel that the rent growth will be consistent? I mean, I'm looking at the fact that we're in the middle of COVID-19 right now, and you're full. Do you expect that to continue, and do you see demand bringing additional rent growth?
Again, I have to say I was very lucky with the COVID, the way it didn't really affect my buildings as much. And the fact that I went the extra mile while building it and putting in the extra quality and all these perks that the building has, I don't have much competition. So it's not like somebody says, you know what, if you don't lower my rent or if I don't get something better, I'll go to the next building, because there isn't another building. If somebody likes the open space, the private elevators, the large terrace, the triple pane windows and doors, the separate insulation in each unit, it puts you at a much better place. So people want to stay there. I do have a few people that want to relocate, and I'm letting them out. But I have people already, to take their place. So I always say, like, it pays to put in a little bit of extra effort and passion into your buildings, because in the end, in the long run, when anything shakes, you're the one that still is able to move forward.
Absolutely. Well, your business plan calls for a 5-year projection, and at the end of 5 years, you may either refinance or liquidate the asset to pay back your investors. Does that look pretty promising to you based on what you're seeing today, and also based on your experience in your previous projects that you've stabilized?
Yes, definitely. I always see a big change on every project within like 5 years, because there's more stores that open up due to all the new buildings that come in. The area changes. Even on Nostrand Avenue, there's new supermarkets, there's new stores that open up. There's new bars and restaurants. So all this together creates the neighborhood and creates a big demand. And as I said before, the project really sticks out. If you look even pictures in the area, it sticks out. You see it from everywhere. There's no other building that even comes close to this height. So that stands out, and it makes it something that somebody wants to buy, something unique or special, like a trophy project. This is it.
But so far, you've been able to generate a higher rent, even though you have higher costs, but because you're creating such a quality boutique product, you've been able to be successful with higher rents and continuously attracting higher rents, correct?
Yes, because it is a boutique building, and there isn't 50 units may sound a lot, but it's not really a lot. So in the gross market in Brooklyn, so it really keeps the exclusivity for it. And people want to be part of it, so it works. If it would be much larger, then there would be, it loses a little bit of that uniqueness.
Well, let's talk about the investors that are coming on board. I know from previous history you have raised capital from friends and family and a smaller network of people that you know well and have been your core investors. Are you excited about raising capital through digital assets with many investors, accredited investors, coming into your projects?
Yes, definitely. This has been my dream for a long time to get be able to move up on the level, so I don't have to rely on the small investors, and I can pitch our products to a larger network. Like this, so it's very exciting to be able to be part of, the new RedSwan.
Well, let's tell the RedSwan investors some of the other projects that you're working on and will be capitalizing in addition to Lenox. And if you're looking to build a larger footprint project, what is that going to look like?
So we have now the building Lenox. We have a very similar building to Lenox. Literally, you see from one building to the other, a few blocks away. On Albee, that's our next, which I would love to get RedSwan involved and the accredited investors in that one as well. It's the same as Lenox. It doesn't have any retail, but it's also the private elevators, the flow-through units, the huge terraces, the triple pane windows and doors. It has the same qualities, and it's also been a very big success. And I'm finishing up now 2 buildings, one building at a time, but on Nostrand, a few blocks away, and that is going to be 94 units, which I'm also going to do as rental. It's also the same thing. There we have the double terraces, front and back. A lot of the 1 bedrooms flow through, and the 2 and the 3 bedrooms I created a little bit different, where every single bedroom has their own bathroom and their own outdoor space. So I could get even more money in the rentals because I can push it as shared living, which is there's a big demand for that as well, even through COVID times. Yes.
So Eli, you've talked about some of the other projects. I think you've left out a few projects that I know you've presented to me, like Flatbush, for example. Maybe you can tell us a little bit of a preview on that asset, because we're going to be bringing it to the market probably in the next couple of months.
So yeah, Flatbush is our next project, which we hope to bring to RedSwan soon. It's 36 units, also triple pane windows, curtain wall. I have a retail space rented, beautiful space. It's a real unique building, and I'm very proud to have this as the package part of the Hello Living group for people to invest. That is our next project.
Awesome, awesome. Well, we're excited as well because you have plenty of product coming in your portfolio. And I think that this is a great opportunity for investors to be able to partake in this type of investment for as low as, in this case, $5,000. But even for your other projects, the minimum investment is under $20,000 per allocation, which I think is awesome for these investors to be able to come in and jump on your back and actually, let you carry the ship to success because you have the experience to do such a great job like you've been before.
It would be a great honor.
Are you excited about that?
Come in with me. I'm very excited to be part of this. Yes.
Well, awesome, Eli. I appreciate your time coming on the show. We're going to chat about this and have some questions from the audience. And I really look forward to closing this investment out. And we have more projects from Hello Living we're going to be presenting. Glad that you can make it to this show. Hopefully you can also make it to the other rooms that we're going to have on some of your other projects. We're really looking for a lot of success with Hello Living. You've done a great job in your community, and I'm sure a lot of people are very proud of you.
Thank you. Thank you. Looking forward.
We're just going to have a chat here, Elliot. I think it's kind of nice that we're doing this because this is you and I talking, and we can just talk about the property and a couple other things, and then we'll be done. But I think it'd be nice because it's dialogue. I know you, and people kind of curious as to what you're thinking, in terms of investments, what you're thinking in terms of this kind of deal. So, like you said, I wouldn't talk about the strategies for hooking deals, but I think everyone's building up a war chest right now, at least trying to build up a war chest so they can help to acquire. And, I'm sure you guys are doing the same thing.
There's no shortage of equity. It's just a shortage of good deals.
I guess the definition is, what is a good deal today?
A good deal.
What does that look like? Well, in terms of yield, yeah, the sellers are still asking for, in Dallas, on a B asset, sub 5 cap. And that makes no sense today to spend that kind of money in the conditions we're in right now, unless you're absolutely just have money to burn. And some people do.
It's interesting, but we haven't really seen cap rates expand out from this coronavirus. Debt costs have gone down, and the bid, sort of the gap between cost of debt and cap rates have actually expanded. So it's an interesting time. I mean, I think we're still trying to find the right deals.
Well, what we're doing with equity, I think, you might want to think about, because if your capital is cheap and you don't have to do a lot of due diligence, you're pretty much making bets on not only the asset, but also the existing management. And if you don't like that, you can always change the management. But, now you're just talking about buying up controlling interest or a strong interest, in which, if it doesn't go the way the board is supposed to go, it can be changed. And I think that just might be a better way for you to place your capital, because what I'm seeing is that they're allowing now the price point to come down to actually, price the equity at a value that may be equal to the senior debt and the mezz debt, and maybe a little bit of cushion. And now you're buying the equity. So you're buying at a significant discount to retail value, but you're putting a pref on top of that equity. So why wouldn't you kind of make that kind of investment if it's going to put money in your pocket and also give you the best position on the property?
Well, I mean, and what you just said is basically why a lot of equity shops, a lot of shops on the East Coast, frankly, just want to put out pref equity, because they're not getting paid enough to put out, true common equity. So everybody wants to do, frankly, what you just said, which is put out pref equity.
So if you saw deals where you can put in pref equity, you get excited about that.
Yeah, and we're doing that in some cases where, the seller is not coming down in price. We have a different fundamental view of value. And one way we're bridging the gap is, we don't 100% have to agree on what the value is, but if we're willing to say our last dollar is going to be X, as long as that's our last dollar investment in it, he may have a value that's 20% higher than that or 10% higher than that. But if my last dollar is X and I want to get paid a pref return on it, then that's fine as well. And we're doing that on a couple of deals, because that's some of the deals we're seeing.
So, hey, that's interesting to hear, because we're on the same page. So if we have opportunities where, like Eli's opportunity, right? This is a new asset.
Right.
He's using the equity to recapitalize, so he can, bring his debt down. And, he's raising $9 million. He's selling 70% of his equity. I'm sure that could have some co-GP, capabilities on that as well. So you have some more control. But I mean, you're steering the ship, and you're on top of his back pretty much. And, and you're in prep position, right? That's just one example, but I see several, and his is a better situation where he's actually stable and full, and it looks like he has demand. But I'm starting to see the ones that are more distressed. Are you?
In multifamily, I would say we have not yet seen true distress. We have seen a lot of, and frankly, a lot of deals we're looking at are deals that are basically brand new, in various stages of stabilization, meaning some are completely leased up, some are 75% of the, and then some are, maybe 50% of the way there. So number one, we're looking at newer assets, or basically brand new assets, because most of the deals we're seeing is basically where you have a new asset that is, just stabilized. And that gives us an opportunity to kind of come in at a good basis, not a phenomenal basis. You aren't stealing deals out here, but to come in at a decent basis with the cost of debt being what it is. I mean, a 10-year fix is sub 3%.
Well, see,
even if you're buying it.
I'm just saying that good is always the question, because, a good basis on a new construction to me would be something just over the cost, right? And then the upside becomes the developer sponsor to be able to meet that additional cost and then profit on top of that. But, good would be, basis is cost plus. What do you think?
I would say we're pretty much trying to say a good basis is is at what we think today's replacement cost is. So, I'm actually here looking at a deal. He started building this deal in probably 2017, and he got it complete and got it finished. We're probably, going to buy it around maybe 190 a door, whereas I think today's replacement cost really is probably around 200 to 210 a door. So I'm actually getting it, a little bit below his today's replacement cost, higher than what it actually costs him, but not by much.
Okay. So not by much, meaning that he was able to probably, make a little bit, but he has to really wait for the long haul to get his return back. I think that's fabulous. Before we get into,
which is why a recapitalization versus an outright sale is more interesting to him, because he still is in the deal, still has an opportunity to see the values increase down the road. He just needs time to get there.
see, that's one thing I like about you is that we always seem to understand what a good deal sounds like and looks like. It's just sometimes connecting that actual deal that works, we come close at it. But I guarantee you now, with this new level of equity that we're doing, and now the fact that you're buying into the equity like this in terms of recapitalization, I think there's going to be a nice connection, because a lot of opportunities are coming up. And as you would expect, we're seeing in multifamily, especially on the East Coast, starting to deteriorate. Their rents are frozen, people are leaving, so they're having more problems. I think that's just going to kind of spread across the country, but at least, that's bringing some opportunities to take a look at. But I want to move on and talk a little bit about the Lenox, because I know you had a chance to look at it, and I want to say that I'm so happy that you're here, because we haven't had a chance to catch up in a long time. And when you called and responded to coming on the show, I said that was great, because we had a chance to catch up and hear about what we're doing, what's going on with RedSwan, and I think this is exciting, and this is like one of the first assets in Brooklyn, commercial assets, would be tokenized and have equity issued based on tokenization and securities. So, we're excited. I'm sure you're excited to see how this is all going to turn out.
I am. I think this space of tokenization for commercial real estate and raising equity via tokenization, can be game changing insofar that you're more directly connecting equity at almost a retail level to sponsors, whereas historically there's been a lot of people in between those two people.
And a lot of fees in between those two people. So the more people that come in between,
absolutely, everyone takes a little piece.
Yes, and we're trying to take all that out, all that call it cost out, and pass that savings on to the investor, so that they are buying directly into the real estate.
Right, exactly. Which is, I think is a great platform, and we've seen that in other areas in the economy of basically cutting out, various middlemen and more directly connecting, equity and investor to the project. My intuition is that we're going to frankly see more of this going forward.
Absolutely. Well, I'm really excited about this, because it's I've been watching this develop over the past couple of years now, and in a way it's a way to provide more equality in commercial real estate capital markets, because we're now allowing people to enter into higher quality assets at a much more affordable cost basis. And so now more people can get involved. I mean, you as an expert in acquisitions, I said this before, your firm knows how to invest. I've never seen you guys make a bad investment. I mean, it's amazing how some people are so successful in buying good deals. You make your money when you buy, and I think you guys do a very good job of that. So think about it like this. Investors are actually investing in your intelligence and platform for making money in real estate by just putting their money with yours per pursuit.
Right, right. I mean, you're 100% correct that you make your money on the buy, and your initial, basis in the project is preeminent, and something that we, work extremely hard trying to find those deals where we can come in at a very favorable basis. And, I think this platform of tokenization really sort of, levels the playing field between, equity investors and the project, where you now have equity that's alongside of you as a sponsor. That's pari passu. Everyone's on the same page and incentivized in the exact same direction.
Yeah. No, I mean, that's music to my ears. It's to me a really good opportunity because investors need to learn. A lot of accredited investors don't really know how to invest in real estate and make great decisions, and be able to follow investors like yourself and be invested, or Goldman Sachs or any other major capital markets investor firm. They learn from their investments on the backs of those who have a lot of experience, and I think that's healthy for the market. And it also brings a point to mind that it helps you as a sponsor. You raise equity looking for different types of capital, whether it be institutional or you have private capital, people you go to all the time, but you probably don't have to make too many phone calls to capitalize a deal. Is that correct?
Yeah, I mean, now we don't have to make too many phone calls to capitalize a deal, but that's because of our historical sort of, what we've done historical and the relationships we have built over, frankly, decades in some cases, where now we can frankly call a group or call an institution or call a high net worth individual or call a family office and say, I have this deal. And, we've built up that level of trust, and we can say, hey, this is what I think, this is why I like it, this is why it's a good deal. And, to be perfectly honest, not all the time do they say yes. There are no's, but it's usually a quick no. But more often than not, given the relationships and our history, we get to a yes, or we can answer questions very quickly and go from there.
Yeah, given the relationship and your history of success, they more likely say yes. And I think this is a major point that I want to make with tokenization, and why I think is so exciting to me is that before, you knew who you went to, and you actually went to capital that you had the experience with. But in a way, that's limited to the people you have relationships with, right? And is restrictive to those who might want to invest with you. But now, when this is securitized, anyone can buy shares, and you won't even know who they really are. I mean, they just get their automatic dividend that's pro-rata to you, but everybody who wants to invest with you can invest with you no matter what. And if they want to change their mind and stop investing with you, they can sell and move on to something else. And is indifferent to you because you have the capital that you need, and you can continue to go back to that capital base if you need to raise more capital. But for the purpose of raising the equity in the first place, you've already put it to work, and it's working for you. So whether or not your investors go in and out is irrelevant and probably a benefit to you. What do you think?
Yeah, it's immaterial after the fact to me.
True. Well, Elliot, I think that we have exhausted the time in terms of the conversation that we wanted to have during this conversation, because we have to move on to our questions and answering. But I'm very happy and thrilled that you showed up today, and we're able to do this. This exchange, I think, was pretty healthy, and we'll see what the audience thinks this Thursday. But thanks a lot for coming on board. Really appreciate it. And hopefully you can come back again for another property.
Absolutely. I appreciate you and for inviting me and giving me an opportunity to share my views with you. And it's great to see you, Ed. I haven't seen you for a while. You've been working hard.
Hey, hey, you have to work hard, but hey, it's going to pay off. I mean, the whole idea is you do what you're excited about doing, and I'm having a lot of fun. And hopefully, things unfold the way we envision. But no, it's always about the ride, right?
So it's time for our Q&A. We have quite a few questions from the audience, but I want all of you guys to dial in and use the chat so that you can send us some messages so we have questions we can ask this prestigious panel right here. But jumping right in, I want to ask the first question. This is an investor asking me, what is the yield on new equity and the preference from an investor standpoint? And I'll answer that question. This is on a 5-year forecast, and I want to put parentheses that these are all projections which are subject to change, but based on the fact that he's had plenty of experience in the marketplace, he can pretty much predict what's going to happen. This particular project is offering a 8% cash on cash, which is a preferred return, meaning that the investor gets their money before the sponsors and other principals get theirs. It's kind of a liability on the project before the sponsors get to split their earnings. It's also looking at a 15% IRR, which is a 2x multiple. That means that you pretty much in 5 years' time, the rent growth and the recapitalization would give you roughly a 2x. So here's a question that I think is also interesting to Eli. They're asking Eli, what is the status of the projects that you have in the New York area, and how is the COVID affecting them?
Okay, so I have a few projects. I have 3 completed projects. The COVID, when it hit the beginning, it was scary. I thought that there's going to be a lot of people that are not going to be paying, people moving out, but that didn't happen. There were 2-3 people that said that they lost jobs and they're planning to relocate, which we let them out, and we were easily replacing them. So I just signed another lease this morning, and I have another 2 being processed now. So we are 100% full, and we have people on the waiting list. So it didn't really, as I said in my presentation before, because we went and the extra mile and we made the building different and more unique, we were able to keep the people and attract people to come, because there isn't much inventory that is similar to this.
Awesome, thank you. Elliot, this is a question for you. What's your experience in the Brooklyn marketplace and also the tri-state market, and how would you compare that to the West Coast? Let's mic on mute. Let me go back to Eli while we check on Elliot's headpiece. Eli, you talked about the development of your project and how it's social distancing relevant. Is that something that you feel is going to be repetitive in your new developments going forward?
No, I don't really think it's not. I mean, it's nice to have the exclusivity and being able to go from the elevator straight into the apartment, but I don't think that makes a difference. I have on Flatbush Avenue, I have another building that doesn't have the private elevators, but it has the big terraces and the hallways on the outside, and it didn't. It works very well. So I don't feel that the COVID is affecting the. Again, we're a little bit more unique, and we attract a higher caliber of tenants because our rents are higher. So I didn't see a big problem with the COVID affecting anything now.
That's good. Here's a question asking about your investors. How many investors do you plan to capitalize on this project? And do you have other projects that you need capitalization for? And I'm going to answer that one for you, Eli, since I'm the one who's capitalizing this project for you. This project, Lenox, which is centrally located in Brooklyn, is a $9 million capitalization, which is basically selling off 70% of the LP equity.
And we have other projects as well.
In terms of the other projects, yeah.
So we have another project very similar to Lenox, which is the Albemarle project, which we hope to bring to the market as well. It's also fully occupied. And then we have the Flatbush Avenue project, which is also complete and fully occupied. Plan to bring that as well. And the big goal is to bring people in projects that are during construction. There's a lot more profit to be made then. And that would be a big excitement for me to have a source of investors coming in to fuel new projects. I have a project that I would love to start in the Bronx. So let's see how this goes, and hopefully we can make this our permanent financing source.
Hey, well, Eli, how do you feel about going digital? I mean, you're one of the first in Brooklyn to be going digital.
Again, digital is amazing. I've always been, in the tech, and I always appreciated it. And now, even during COVID, like, it's amazing how much everything is advanced. The way we can do everything digital, the way we're pitching deals to the entire world, all over, coming together like this. I love how I communicate now with Zoom, and how I have meetings with banks and review documents together and share spreadsheets. It's amazing to use the technology and the digitalization that is out there, to your advantage.
Yeah, I totally agree with you. There's over $500 trillion worth of assets that have been digitized already, and we're looking forward to creating more digital assets in commercial real estate. I have a question for Elliot. They're asking us what your opinion is on the yield for the Lenox compared to other deals that you've seen.
Good. So hopefully everyone can hear me now. Yeah?
We can hear you.
Yes.
Good. Well, Ed, you kind of touched on this earlier. We're living in a world that it's tough to find yield, kind of across all asset types. We have, a couple $1 trillion worth of negative yielding bonds, and there is a flight of trying to find yield and return on investments, which is difficult to find in today's environment. Historically, multifamily investments has been an area that has performed well over the long time. We're talking, 40, 50, 60 years has performed well. And when we look at the investment sort of horizon today, where can we find appropriate yield without taking too much risk? Because that's the game, to find yield, but not too much risk. Multifamily has traditionally been one of those areas. It's a great protection against inflation. So when we look at the cash on cash yield of 8% relative to where the 10 years treasuries are trading, which is probably today around, I think, 2.65, you're talking about 500 to 600 bips over that. That's attractive. You can't, you put your money in a money market fund today, you're barely getting 2%, if that. If you put it in a CD or a savings account, you're not going to get that. So getting 8% on an annual basis, cash on cash, is pretty attractive. But more importantly, it's attractive relative to the risk. You're investing in an asset in a great location, in one of the gateways and capitals of the world, where there's a lot of liquidity. So it's on a reasonable basis, it's great yield for the relative risk.
Great. And Elliot, before there was a question you missed. We were asking your opinion of the Brooklyn market and how you compare it to the markets on the West Coast in terms of multifamily investments.
Yeah, I mean, in some ways, they're, New York and, say Seattle, Portland, San Francisco, or LA are pretty, in some ways, kind of similar. They're gateway markets. They attract a lot of foreign capital. Probably New York attracts probably more foreign capital, and that all goes to your exit. I mean, when we buy a deal, the first question we ask is, how do I exit the deal? Who am I selling to at the end of the day? Because that affects your yields, that affects your IRR. New York is, in Brooklyn, obviously just a borough of New York City, is one of the most liquid real estate markets in the world, period, bar none. So that is, fairly attractive. That when and if the time comes that Eli wants to sell this deal, it's going to be, he's going to have lots and lots of people lining up to make offers on buying it. I was in, I was in a city, Chattanooga, and it's an interesting market. But when and if we're going to go sell our asset there, I'm not going to have 100 people lining up to buy that offer from me, which is fine. So I think New York attracting capital from all over the world is highly liquid. Is a highly liquid sort of market that kind of gives you some comfort on your exit.
That was a great answer, Elliot. Thank you. Another question is coming to you. What's your average check size you write for equity when you're looking at recapitalization deals? And also, how do you feel about other accredited investors joining in on your investment with the equity?
So I would say, our minimum check size on equity for recapitalization deals is probably 10 million. That's probably the minimum. Probably the sweet spot is, I don't know, 15 to 30 million for recapitalization. So that answers your first question. As far as having other qualified investors participating in that recap, that could be attractive, provided that the structure is correct. But having someone else who is a professional investor in real estate also be willing to put their capital at risk in a deal alongside yours is further affirmation, sort of hey, this is a good investment. And so when you have a whole lot of people willing to put their hard-earned capital at risk in investment, saying, hey, this is a good investment, that should also give you some additional affirmation, because everyone will be bringing their own experience, their own knowledge into sort of analyzing that deal.
Yeah, we're looking forward to that. We think that's we like seeing that the private investors coming in get to kind of ride along with more experienced investors, which teaches them some of the tools of trade of being successful.
Absolutely.
Eli, this may be one of the last questions before we have to terminate, but the question here is, what are you going to do with the new capital that you generate from this tokenization?
Okay, so this is, I go from project to project. So I have a nice few projects lined up in the pipeline already. So I'm looking forward to be able to move forward. And I would love to invite other credit investors to join and be part of it. So yeah, that's the main thing, going from project to project. That's what I love to do, and I want to continue doing
Awesome.
it.
Well, thank you. I just have one other question here that just came in and I will answer, is asking how is this tokenization process helping the capitalization of your asset? And I think that really the main benefits here is that you have up to 2,000 investors who could crowdfund into this opportunity. And that means it breaks down the entry price to a low number, like $5,000 in this situation. And they don't have to stay in the investment for the long term. If they decide they want to sell out or liquidate, they have that option for early liquidation. So that's one of the main benefits why I think is attractive to Eli, as well as the investors. So I think we're out of time right now for questions. What I want to do is talk to, just close out and talk about the projects we have coming up. We have another property coming on August the 21st, and it's going to be a Oakland asset called the Lake House Oakland. This is actually a 22-story high-rise in the CBD of Oakland. It's a Type 1 construction. We're capitalizing $40 million. This is a developer that's based out of California, as well as the co-developer works out of Washington, D.C. And they are capitalizing this asset for the first time. They already have the debt in place. It's $135 million worth of debt that's secured by a HUD loan with low interest rate. And the overall capital stack is going to be $84 million. So that's Lake House Oakland coming on, like I said, August 21st. The sponsor who will be coming on board will be the Urban Core Development Group, led by the president, Michael Johnson. So you don't want to miss this. It's going to be another outstanding opportunity, and we'll see you then. Thank you very much for your attention. If you want to stay on, we're going to continue maybe to ask a couple questions, but the show actually is going to terminate now because we wanted to keep you on time, knowing you guys have lots of things to do today, but we do appreciate your attention to this projection. Appreciate it very much. Have a good day, everyone. Bye-bye.
Thank you.
Okay, do we have any other questions here? We had a whole bunch of questions, guys, but we answered a lot of them, and I know that it was be hard to answer almost 25 questions here. The one question somebody asked me was Eli's thought on some of the attributes of your construction in terms of how you consider the quality of condo different from what you see in an apartment building. How did you construct the property using condo construction quality, which is different from what you normally would use in an apartment building?
Oh, so it was built as a condo. In other words, every unit has their own systems, own hot water, own AC systems. Every room has their own mini split, and the ACs are literally parked on the outside. So it's built in a way that it's very easy to divide and becoming its own standalone unit. I've done this in all the buildings, so it gives me the options to go rental or condo.
Awesome. You know, that is actually the last question, so I don't think we need to keep you guys here any longer. I am really happy for what we've done. This has been a great show. You guys did a great, fabulous job of answering the questions. And I hope to bring you both back for future projects we're going to have. And I'll be happy to tell you the success with this in the coming weeks. So thank you very much, gentlemen.
Thanks.
And
Thanks, Ed.
we'll be in touch with
Thanks,
you.
Eli. Thanks, guys. Bye.